We're live, brother.
Hey, welcome everybody to Income Streamers. Appreciate the patience. Oh, we're actually on time. Good. So the agenda today, 2021 IPOs and the next trading competition. And man, am I excited. Let me pull up where I can see the comments. Tony, are you on the call?
Was Tony the winner?
Tony smashed it.
Yeah, smoked it.
53%.
Yeah. In 4 days.
Yeah.
Actually, that's three. That's 3 trading days since Monday was off.
Mm-hmm.
Tony, if you're listening, tell me you got a piece of that, man. Tell me you bought it. Tell me you own it, right? That would just make this much, much sweeter. I'll pull up the chart here in a second. All right,
There's Tony.
Oh, probably check. Okay, comments. There we go. Yes. Yeah, earlier this week, Tony saying down market. I'm about to show the NASDAQ. Yeah, for a couple of days, the market wasn't really very good at all this week. It kind of looked like it was just going to, momentum looked like it was slowing. And even I thought the market was going to pull back. And man, that just goes to show you how resilient this market really is. I mean, I've been saying this for months. Like, you're in the kind of market where you want to try to stay in as long as you can. And I'm not saying we're going to kind of have the rally like we did last summer coming out of the March 2020 crash. But you never know when that just game-changing rally that lasts 4 or 5 months is coming, regardless of what's going on in the news. So try to stay in. I'm not saying don't use stop losses, but don't go out and sell everything every time the market has a bad couple days.
So I was extremely inspired. Like I built the list of everybody's ticker, and I think Tuesday I ran just the percentage gain for those just to see where we were at. And Tony was already like flying up. What was it? Rocket Labs. I actually put the ticker or the chart. Can you see it behind us?
Our faces are in the way. I'll pull it up here in a second. We can start off with that when I go to screen share.
Yeah. But there was, over 70% of the people who got in this actually had a winning trade.
Yeah.
But the next closest on the list was John with UPST at 17%. That was kind of, 17-20 was where I could see somebody really taking this. And at 53, I'm just blown away. And it has definitely inspired us to run this again. We're going to talk about that at the end here after we, kind of cover some things. We'll talk about what we're doing next. I built a little form to where we could submit the picks, up the prize pool a little bit. I say we do it again.
So, Tony, Ben, I assume you have Tony's email. Tony, we're going to email you a $100 Amazon gift card. So I think Ben's got your email.
Yes, I'll email you after this, Tony.
Okay. So what else we got on the agenda? Hey, everybody, if you really appreciate what we do, if you're close to kind of our YouTube page or whatever, Ben's going to drop a link to our YouTube channel as well in the web form. If you can go ahead and like the channel, the more obviously thumbs up we get, the more people we can help and the more people we can get in the contest, and it'll be a lot of fun. So if you appreciate the work we do, I'd really appreciate you to drop a like on the video, on the channel, subscribe to the channel, not a like, subscribe to the channel. That way when we publish something, you automatically get it as well.
It's an important part of the process for us to take this into a live stream content distribution for us. Like we really want this to be live. We want to interact. We want to engage, and it's a lot more fun. And we just really need that to keep this moving. So for everyone who has, we appreciate it. For everybody that will, we will appreciate that. Steve, you want to take over with IPOs?
Yeah, I'm excited about today's topic. First, we'll look at Rocket Lab real quick. Then we'll look at the market for just a couple minutes. And then I have a list of about 12 IPOs we're going to cover. It's been a hot market, but there's a certain way I always like to trade IPOs. I want to share that with you. So I'm going to go ahead and might take a second to share my screen. Okay, right here. Can everybody, Ben, can you see that right there?
Mm-hmm. You want me to make it full?
Yeah, go ahead and make it full. So this is Rocket Lab right here. The funny thing is, I think it was early in this week, because I scanned for volume scanners. This popped up on my scanner, but I didn't know anything about it. I kind of looked at the fundamentals, and a lot of times when Market Smith doesn't track the fundamentals, I usually am like, so maybe there was, some guy. It looks like it's in the manufacturers rockets and spacecraft, right? So maybe they got a contract or something. I don't know. It's kind of a little bit more news oriented, but sometimes that's really all you need is, this was actually perfect. This is a perfect case study because I was talking about this last week when stocks consolidate and then you kind of find that pivot at the bottom of the base. And then all of a sudden it clears that. Usually it's going to fresh highs, right? And I think last Friday, I believe that was 9:03. Yep. Last Friday, it broke above that pivot and then it just absolutely took off. Now it's up or it's down a little bit today, but that's, something that goes up 50, 60% in less than a week. I mean, that's completely normal, right? So what will be interesting to look at this stock is if there's some buying comes in kind of midday and it can close in the upper end of the range. But this is looking pretty strong. Probably not something that I'm going to chase at this moment because I think the ideal time to buy would have been last Friday, right? I'd probably wait for a pullback, see if it kind of pulls back to 15. But you never know. This is a really strong stock and you might not get that chance. So, Definitely hats off to Tony. This was an absolute great pick.
Said he found it scanning for volume.
Yeah. And that's kind of how I found it too. I found it scanning for volume, but I go through so many charts. I just kind of glanced over it. And me personally, I'm a little hesitant to sometime, just to read articles. I'm more like just looking at the straight chart. And that's probably why I just passed right up on it. But let's look at the NASDAQ. We'll start with the NASDAQ, and then we'll go to the S&P 500. And I talked about this at the very beginning. So we don't know if the market's going to go to the moon from here, or we don't know if the market's going to really start to correct and go into something, negative next week. We don't know. That's why we have rules, right? We're not trying to know. It doesn't matter. My opinion doesn't matter because a couple of days ago, I was thinking when you had a couple red days and then the NASDAQ, I was like, oh, it's probably going to come down and test the 50. And then today it's up, over 0.5%. So at the end of the day, we have to make sure we have rules to keep us in, right? We are in a big bull market. We are in a super cycle. No matter what you see on the news, it doesn't matter. It's kind of funny. I was talking to someone at soccer practice last night. And this guy just, all he does is, just reads a lot of articles and stuff. And that's totally fine. Just watches the news all day long. The problem with that is sometimes you can really have a lot of biases when you are just watching the news all day long, right? Because there's negative news. So you think the market's got to go down, right? And these biases get in the way of your trading decisions. At the end of the day, I'm really just trying to look at the chart and see what the chart's telling me, because I think it was it this red day right here on August 26th, a couple weeks ago? That was when you had the blast at the Afghanistan airport in Kabul. I thought that was going to really pull back the market. The market shook it off and just continued to hit new highs. So it's, or maybe it was down here. Either way, the market is shrugging off bad news. So we're in a pretty bullish situation. How long that's going to last, I don't know, right? But I'm going to stay in as long as my stocks are telling me that they want to continue to go higher. S&P 500, you would never think that you could actually have a boring uptrend, but the S&P 500 isn't a boring uptrend, right? It's just 45-degree angle, right? It looks like a stock. There's nothing wrong with this chart at all. Yes, it looks like momentum is slowing. Maybe you kind of get that pullback and that bounce. We are entering historically September, October. Those are historically a couple bad months of the year. But honestly, to me, I pay no attention to that, because that doesn't mean the market can't continue to take off for 3 more weeks before it really pulls back. So everything still looks good on the chart until it doesn't, right? Until the market breaks this level right here from a couple weeks ago, the August 19th low, and it really kind of breaks a key low. I'm going to try to stay in as long as I can, right? But I could draw a nice, you can see the orange line is the 50-day moving average, a nice little trend line. I could draw a nice little trend line right here. And that trend line has found support 7-8 times. Until that's broken, we're in an uptrend. So what I want to do today is I want to talk about the IPO market. There's a lot of hot IPOs. There's a certain pattern that I see over and over with a lot of these fast-moving IPOs. Now, with IPOs, they are a little bit harder to handle and deal with, just because they're moving quickly, right? A hot IPO market, like, you had the Rocket Lab, those stocks can be at 50% in just a couple weeks. So you have to catch it right. But I want to talk about this. So I want to talk about what I call the shakeout pattern. So let's really look at this, and I'm going to look at lots of different scenarios between lots of different IPOs. Okay.
Did you know, Steve, that Rocket Labs was IPO'd on the 25th of August? I just realized that looking at that.
RKLB. Well, it's actually showing public since last December.
Oh, what am I reading about August 25th?
I don't know.
All right, good.
Okay, let's go. So when I look at IPOs, right, it's a lot of times they'll pop and drop. And actually, let me start with some IPOs of what not to do. Right? How not to get caught into the hype. We'll start with Robinhood. And I think, this is obviously a very popular name, right? It's hot off the press. They've just absolutely crushed it, the last couple of years in the private market, and then they go public. Just because you have a exciting stock or an exciting company, maybe it turns into a meme stock, I don't know. But just because you have an exciting company or an exciting theme does not mean you're going to make money. I guarantee you, a lot of people, you can see this stock, it popped within the first 4 days, right? It went from under 40 to over 80. Okay. Here's the problem. A lot of people get caught in the hype, right? They might buy it on the way up, and then they're just going to ride it all the way down. So normally when I'm looking at an IPO, I'm going to wait for that first consolidation. I'm going to wait for some pattern of some kind. Because all stocks have personalities. We all have our own personalities. Some IPOs are just way too volatile, and it's hard to catch a smooth trend. Some are a lot smoother, and those are the ones I want to be in. So usually I wait for the personality of the stock to really come out. So with something like Robinhood right here that popped, right, and now it's in a downtrend, okay? This pink line is the 20-day moving average, the 20-day exponential moving average. And I normally use the 50-day for more mature growth stocks, but when you have a shorter time frame, a lot of times this 20-day is all we have to work off of, because we don't have 50 periods yet. So for this one right here, this isn't a straight downtrend. There's really nothing good about this chart right here. I'm not going to buy a downtrend. I'm going to wait for it to turn, maybe make a pivot and break out something like this, okay? I'm looking, so there's 2 ways you can play IPOs. You can pick a pivot on the chart, let's say this. See this right here where it tried to pop and it failed? All right, so that's clearly a key pivot right here. So I'm going to wait until, and maybe it tries to do that a couple more times before it does this. I'm going to wait until it breaks this. There is just no point in me trying to buy something that's in a downtrend. Just like there's no reason to sell something just because it's in an uptrend. All right. So Robinhood right here, this is a perfect example of what I'm just going to wait on and be patient on, because so far it has not created any kind of pattern. It has no personality. I don't know what kind of stock it's going to be. So I understand we get caught up in the excitement, but Coinbase is another great example of something that, popped. Let's see, where did it open at? On its IPO day, it opened at 310, right? The IPO was 250, but it actually gapped up at the open. It popped to 430, and it's not anywhere close to this price right now, right? It went straight down because, again, remember, we're waiting on some kind of personality. We're waiting on some kind of pattern to emerge. I'm not going to get caught up in the hype or the excitement, because a lot of people, even if you catch an uptrend, you catch an IPO where it takes off in the first several days, in my opinion, you need to get out quick. A lot of people are going to think it's going to go to the moon. They get overly emotional, and then they ride it all the way down. So with something like this is right now trying to bottom. You can see that it's trying to kind of round around the right side. So at this point in time, it did pop a little bit, I think, on earnings. And the cryptos, at least in the last week, have kind of came back down to earth a little bit. So remember, I talk about find that pivot. If it's trying to kind of create that cup, that U shape, find that pivot right around 300, and you got 306 right there, and buy it as it's crossing above there, because this could go sideways and go nowhere for a long time. All right. Why not buy? Why not pay a little bit more for something to have a little bit higher conviction versus buying while something's going sideways and going nowhere? But again, this is a perfect example of an IPO that just has a lot of excitement, right? But it hasn't gotten there. It hasn't became that just super exciting stock that, we had all hoped it would be. And that's because really since it IPO'd, the crypto market has been, for the most part, down. Most, Bitcoin hasn't came back to where it was. I think Bitcoin peaked in March. This came out in early April. Doesn't matter why, right? Don't focus on the why. Focus on the what. What is happening on the chart? And what is happening on the chart is you're in an ugly sideways consolidation, and you probably need to wait for some kind of pivot, some kind of pattern to emerge. Okay, so the rule of thumb is just don't get caught up in the hype. Now I want to talk about a pattern that I see a lot of IPOs really. This is something I look for when I look at IPOs, and I love looking at IPOs just because I love the new. I love new companies that are coming online. It's just part of really just American capitalism. I love all these companies, the stock market, everything. Right. But we're looking at this, and this is SEMR. Okay. And it's a SaaS company. I'm not really going to worry about, what it does. But so a lot of times when you see these, let me kind of draw a line. Remember I talked about when an IPO, see, this kind of took off and it got really, really sloppy. Okay. It's in an uptrend, but it's sloppy. And then you have a cut pattern emerge. And I keep talking about buying at the bottom of the base. So the ideal time to buy this, based on the previous charts I just looked at, right? Pick that pivot at the bottom of the base. It's got at least maybe 2 points of resistance. Once it breaks through, that is the best time. Now, a lot of times it moves so quickly, or we might miss it and we don't catch that. Okay, because this moved very quickly. This went from 18, to 28 in a few days, right? A week and a half. So here's what happens with a lot of these IPOs, and they are volatile. They will break out of a consolidation of 52-week highs. In my opinion, the worst time to buy it, especially if it is breaking out to a 52-week high, is right where the most obvious place is, because a lot of the retail traders are buying up here. They're like, it's getting 52-week highs. It's getting excited, and then they get shaken out. Right, it's what I call the shakeout pattern. You might call this a cup with handle, but I usually call a cup with the handles are much lower. So I like to call it a shakeout pattern. The market and the idea behind the shakeout pattern is a lot of the market tries to wear us out. They try to shake us out, get it, we buy something, we put a 10% stop loss, they try to shake us out, right? And then they go and resume the normal uptrend. Well, what I've noticed that happens with a lot of these IPO stocks is they'll break out, and then they'll see this pink line, the 20-day moving average. It's usually slowly trailing it, and then they'll come back under this 52-week high pivot, and then they'll touch it, and then they'll come back up. So it'll kind of do something like this, right? So let me clear that. So ideally with these shakeouts, you have a lot of people that are buying up here, getting excited. If they use a stop loss, which they should, they're probably going to get shaken out. But ideally, you want to buy it in this box right here, right as it's within that first pullback to the 20-day moving average, because some people are buying up here most of the time, not all the time. Most of the time, you're going to get shaken out. And the ideal time to buy is right as this support line is coming up, right? I like to say the stock gives the 20-day moving average a little kiss, and then it goes up. So just kind of keep that in mind. When IPOs break out, look for it to pull. Look for that 20-day moving average to be creeping up behind. And if it pulls back and you can get it in within 3 to 5% of that line, that would be an excellent entry. And it'd be a low risk entry because you just bought a shakeout, right? A lot of people are buying here. They just got stopped out. And you can easily put a really, really tight stop loss below. Because if you buy as close to support as possible and it doesn't hold, just get out. There's no reason to continue to hold the stock. Let me show you more examples. See this over and over in IPOs. Let's look at Fly. Okay, let's look at Flywire. This is a FLYW, okay? It broke out right here, but then it came back. This was a very, very short consolidation. It came back and it formed a deeper consolidation. Now, right, it had a pivot right here. Ideally, you could have got in right here, but a lot of times when they start to pop up on your volume scanners, sometimes it's already a little bit extended. So look at what happened. Just like the previous stock, it broke out of this cut base and then it pulls back and it gives 20-day moving average a little kiss right there and right there, right? Found support twice and then it just absolutely took off. So again, I am not buying traditional breakout zones. I think that is, I did that early in my career and I just found out I was getting shaken out all the time because I'm using 8-10% stop losses. And I was just getting shaken out. So I'm like, okay, why don't I wait for the shakeout? Because if there's a nice move up to the breakout, it likely just needs to retrace a little bit, find support, and then it takes off. So this is another great example. And again, you will not see this on every IPO, but when you start to see it pop up over and over again, right, train the eye. You can get in right here as it breaks through a key pivot area at the bottom of the base. Ideally an above average volume, or if you see it late and it breaks out to a high, keep an eye on that 20-day moving average, right? Because it's creeping up and see if it finds support. Now here is the hard part. The hard part is these IPOs, they move very, very fast. So a lot of times, unless you're staring at the screen, it's hard to get within that 3 to 5% because it'll hit it within an hour and bounce right off. So if you have an ideal stock, let's say you're doing your weekend homework like we all should be, right? Look at some charts on the weekend, get away from all the noise. That way you can look at things objectively. And you say, okay, let's say you see this is breaking out. And let's say it's right here. This hasn't happened yet. Then you could just put in a buy order within 3% of the 20-day moving average. That way you don't have to watch it. And then if you get a notification, you get filled, you can just keep an eye on it to see if it holds throughout the day. And the reason why I'm telling you this is because I would keep an eye on a lot of these stocks, but the pullbacks are so fast that unless you're really watching it, that sometimes they are hard to catch. That's kind of the downside. So the good news about placing in just kind of a limit order is, one, you don't have to be watching it, but two, when these pullbacks happen, right? These are volatile stocks. When these pullbacks happen, sometimes they're a little scary. Sometimes they can get you to change your mind on buying the stocks because the pullback is so quick. You're like, oh, that's volatile. I don't want to buy that. So it kind of keeps you in your trade plan if you just make it mechanical as possible. The more rules we have, the more we can automate our trade plan and make them as mechanical as possible, the better. We'll look at some more examples. I'll take some questions. Then we'll look at some more examples to see if anybody has questions about these patterns. Okay. So here's another example, ELYM, right? You can see that it broke out and then it pulled back. And again, they don't all look exactly the same. These stocks are trying to, the personalities are trying to come out. We don't really know yet because there's not enough data right here. See that pink line right there? See it barely pulled under this breakout zone right there. I believe, I guarantee you that's within, right? Just 21. Yeah, that's within about 4 or 5% of the 20-day moving average. And it probably happened so quickly. So again, you have something that went from $15 right here at the bottom to $30 in about 2 weeks. They're going to move fast. So if you see that and you say, okay, now it broke out right here, I'm going to put a limit order, once this 20-day moving average pops up, I'm going to put a limit order within 3 to 5% of that line, see if it gets filled, see if it holds. And then the next day it was up 8%. If you would have got filled and the next day it was up 8%, and the next day, today it's up 10%. And I understand this is hindsight, but the more IPOs you look at, the more of these patterns you're going to see over and over and over again. So let's look at one more. So here's another extremely volatile one, IMGO. A lot of these biotechs, I normally don't trade IPO biotech. I normally don't trade a lot of biotechs, just FYI, but especially I don't trade a lot of IPO biotechs, but some people do, right? Because a lot of them are pre-revenue or they don't have a lot of revenue. But anyways, you have, this is a classic case, right? You have, it broke out and it went up. After it broke out, it took about a week and then it popped, was up 34%. And within 2 days, it had probably dropped 40%. And it came down and it broke the 20-day moving average line, but it found support by the end of the day. Okay, so you would have got filled. Will this trade work? I have no idea. It looks a little volatile. And again, I don't trade biotechs, but this is just another classic example, another classic case study of, when I'm looking at an IPO, where do I want to get in? I want some kind of pattern to emerge. I want, support lines to emerge. And until that's happened, I'm just going to kind of sit back and wait and watch it, right? Anything that pops and is down 40%, within 2 days, probably too volatile for me. I like nice and neat, but that's what I call the shakeout pattern, or just the shakeout, right? We get shakeouts in the markets all the time, right? They try to break out, suck everybody in. Oh, this is going to the moon. Pull back under that breakout zone, and then you got this 20-day moving average just kind of creeping up. Okay, so it's a great example. Do we have any questions about this type of pattern? Kind of before I move on, Kevin, I'll get to your ticker here in a second. While I got this chart pulled up, these 4 examples I looked at. Any questions at all?
I guess you explained it really well.
Well, I like to think so. Yeah, so DOCS, DOCS, I think this is a perfect example of one that just didn't, right? It broke out, it came back, it broke the 20-day moving average. Honestly, I probably wouldn't have bought this anyways because it was about to report. I'm not going to buy something within a few days of reporting. Okay, but it did. So this is a pretty good example of something that just, and it came back after earnings and really reclaimed this line right here. So something you definitely want to pay attention to. And I'll show you one more example. So this stock looks good. See how it finds support at the 20-day moving average now that it's reported earnings. It's obviously extended. It's 50% above the 50-day moving average. One I've been watching is CFLT. Look at this. This is one that I just missed. I had it on my watch list, but I still have it on my watch list. You can see right here, it popped and then it fell into this IPO base. Now, when it pops and starts to drop, it dropped from 58 to 37. That's nothing to sneeze at. I'm not going to sit through that. But look, it created that little cup, it reported, and then started to shoot up. So you could have entered on day 2 after earnings as it broke out right here, and then it went up. I definitely missed that. I kind of noticed it somewhere in this zone, and it broke out, and then it came right back, right? Sucked everybody in, shook them out. This is probably a 15% move. Remember, these are volatile stocks. This was up from 40 to 60 in 2 weeks. So that's a 50% move. But look, it broke out. It came very close to the 20-day moving average line. Tried to go up again, literally touched the 20-day moving average line, second opportunity. And then just you had this bull bar, and this actually happened last Friday. I should have bought right here on this last Friday, as it just kind of retook this breakout zone. But I was frustrated because I wanted to get in close to the 20-day moving average. I just missed it. And now it's up quite a bit, right? It's up, I don't know, maybe 10% this week. We'll see where it is. It's up 11.9% for the week. So this is another just classic example where you can, once you pick these pivots, you can buy, right? As it crosses there. If you miss it, maybe you have some breakout scanners, some IPO breakout scanners. So you're starting to catch them as they come across here. So then you can place your order. You would have bought on this first one, you probably would have hit an 8% target very, very quickly. So it'd be really, really easy to set up some kind of IPO breakout scanner, right? And just scan them on a daily basis. And that way, if you see something that's breaking out, you see that 20-day moving average kind of creeping up behind it. When something moves up 50% or 40 or 30 or even 20 so quickly, I'm going to, and it pulls back, I have to make the assumption that it's going to find support. Because all the people that just pushed it up, I'm assuming that they're going to support it at a support line. This is another great example. So far we just kind of have 5 classic IPO examples. And I understand that I'm showing you examples of stocks that are already extended, right? This is a mature rally. We're pretty late in the rally. I get that. But this is something that I have really traded for several years, and the pattern hasn't gone away, and it's very, very powerful. So this is something that if you learn, you can really own it forever. So we looked at 5 classic shakeout patterns. We looked at some patterns, to avoid, like hood and coin. They just have not hit yet. Let's look at a couple more. So I want to look at some examples where they didn't pull back, right? They didn't really shake you out. Well, in this example, LAW, you can see it broke out and then it immediately got slammed 9% the next day. There wasn't any 20-day moving average because it was only, a 7-day IPO. But it confirms the shakeout theory. When you have these IPOs and they try to break out, I guarantee you a lot of people bought this and just got hit hard the very next day. But then it settled down. But right here, you have a support of the 20-day moving average. Now, I'm not buying this because it reported within 3 days, but this is just more evidence to show you a lot of these strong IPOs, they will find support at the first moving average, that 20-day exponential moving average. And this supports the theory of the shakeout. You don't want to buy in the most obvious spots. You have to almost anticipate the shakeout, even if that means you're going to miss something. Because for years and years, I traded these traditional breakout zones. Like I would just buy it, and a lot of times I'd get shaken out too much. So now I really look at a pattern and I'm like, okay, where's the market going to get me? I mean, that's just kind of what I'm looking at. Like, where's my risk in this trade? Knowing what I've known, seeing the way stocks handle, and I usually would rather just let some go, even if I miss them, but anticipate the shakeout. Okay, so someone asked me a very fair question. They asked me on Docs, let's go back to this stock. They said Morgan Stanley adjusted his price target to 71 from 52. I put absolutely zero weighting in any kind of analyst rankings. Just zero. I mean, the reality is these analysts are paid by the actual companies. Most of them are to rank their stocks. There's an incredible bias there. These guys and girls get it right about as much as the economists do, which they have a very low batting average. At the end of the day, that doesn't mean an upgrade from neutral to buy won't make a stock pop, right? Upgrades will make a stock pop if the analyst is one of the top dogs, but I look at what's on the chart. As far as like guesses, I mean, how far a stock is going to go, that I don't do that. I say, okay, does the stock look right? Is it near an entry? Is it near support? I'm going to buy it, and then I'm going to automate my profit booking strategy. And I'm going to let that stock go as long as it wants to, as long as my rules tell me to keep me in. I've never made decisions off analysts. They don't have any skin in the game. But it's a fair question. So yeah, Morgan Stanley is a top brokerage house, but they have, hundreds of analysts. There's probably only half a dozen to 10 analysts out of the thousands out there that can probably actually really move the market. So yes, Morgan Stanley is a top broker, but I don't know what analyst did it. But still, what if someone, I'd kind of ask you, like, what if someone upgrades a stock or increases its price target and the stock doesn't do anything? All right. Or what if someone increases the price target? So he had a price target of 70 and it's already past 100. Now, do you sell it just because it's above where an analyst said? I mean, the stock could go to 200. It is just a pure guessing game to me. They're based on fundamental analysis. And at the end of the day, I do look at fundamental analysis. I do look at earnings. But I know a lot of companies with phenomenal earnings and the charts look like crap. They're in downtrends. So I'd rather focus on what is right in front of me. What is the overall, because all of these are people voting, right, on whether a stock's going to go up or down. I'd rather look at the votes versus what a stock should be doing. Don't focus on the why. The why is the analyst. The why is the fundamentals. Focus on the what. What is the stock doing? The stock is in an uptrend. How long is that uptrend going to last? I don't know. You're welcome. So we looked at law as another example. We'll look at another one, BDRG Bridge. This is a fairly new stock. It looks pretty thinly traded. But it's just an interesting chart. This is one where it broke out and never looked back. But it popped, about 20+% after earnings. You can see it broke out right on earnings and it never looked back. But look where it's at again. It's at that first test of the 20-day moving average. Could get, if this is a strong market and this is a strong stock, you could get a very low risk entry, risk 2%, and see if it bounces or not. Now, the volume is incredibly low today, so I'm not. Let me see. The 50-day average volume has been 600,000 shares, but there's not a lot of data to go with this at all. So it's probably going to end up being a thinly traded REIT. But it's sitting on support. Okay. Again, not all stocks are going to, let's look at a couple strong ones. So this is DLO. This is something I've had on my watch list, on my short list. I'm waiting for the gap to fill. I don't like buying gaps, right? I'd rather wait for it to fill. It's, created a little 7-day, 8-day IPO base, never looked back. And then it got real choppy. Didn't find support. but it did create a nice little bull flag, right? And then it tried to break out and it failed, and it gapped on earnings. And it gapped, I think, 26% on volume that is 1,000% above average. That's huge. And it hasn't gone anywhere. And it did touch that 20-day moving average. Now, this is one of those classic examples where I'm going to let me personally, I'd let the gap fill. But that's just me. It might take off to the moon from here. But anything that gaps up on 1,000% above average volume, I'm waiting for the pullback to support. Like right here, if it pulls back to support, even if it doesn't, I'd let it break the 20. But look, the 50-day is right behind it, right at the bottom of the gap and right at this breakout level. I'd be really interested if it comes within, 3-5% of that. Because I would make the assumption that based on all this power, all the volume that pushed this up, all the volume that's held it up, right? There's a lot of tugging and pulling, you can see. Where you're trying to figure out who's in charge. But I'm going to guess that it finds support. But here's the kicker. When you have these IPOs that move so quickly, they are going to move quick. It might come down and touch this line in 15 minutes and be extended, and you're like, dang, I missed it. So with any kind of super fast mover like this, something that can go up very, very quickly, you might just want to place an order, see if you get filled. You'll get a notification on your phone if you get filled, and then you can quickly look and see if it found support. Okay? I mean, that's what I would do. I mean, at the end of the day, all right, full disclosure, make your own decisions. It's not a buy or sell recommendation. You have to do your own homework. You have to be comfortable with your own trades. You always have to use stop losses.
What was that?
You always have to use stop losses.
Okay.
Always. Right? Know where you're. Anytime you get in a trade, before you hit that buy button, you have got to know when you're getting out on the downside and if it goes against you, and when you're getting out on the upside. That needs to be decided before you even buy. And do not change it after you buy.
I think we got it.
Okay. That's most of the IPOs that I really, really wanted to cover today. Just really kind of wanted to show you some things. We are in a strong IPO market. A lot of companies going public. But I think really the lesson of the day is don't get caught up in the hype. Let that IPO really create a personality. Let it create a consolidation, and then buy it as it's breaking out of the very, very bottom of the base, like I talked about, that key pivot, or if it breaks out and pulls back and touches that 20-day moving average. If it doesn't give you an opportunity, sometimes this will happen where and you'll be like, oh, see, I should have just bought it, right? At the end of the day, you have to do what you're comfortable with. I've traded these types of growth stocks too many times where I'm like, I'd rather just buy the shakeout than get shaken out half the time.
So, man, I've got no voice today.
It's because the Cowboys lost.
Ooh, had to go there. So, the reason a lot of the things that we talk about are questions that come in through customer service. So I'm just putting that out there for everybody that's on the call live today. Anything that you would like us to talk about or have suggestions for a show, please email me at support@thetradersplan.com or put it in the chat box. Just so you know where some of these topics are coming from.
Mm-hmm. Yep. And I get asked questions about IPOs all the time. I thought since they're hot, this is a great show. Another really hot stock that just doesn't want to stop. And I think this was our second place. Someone picked this. It was our second place. All right. This is just a great example of one that broke out and it just never looked back. It broke out on earnings. I wouldn't have caught this either way. The ideal time to buy it would have been right here, but it gapped way up and then it never pulled here. I have no problem letting a stock go. All right, because over time, yes, you might make money, and maybe you have a process where you make money buying these gaps, right? I'm trying to say, okay, where am I going to make the most money, a reasonable amount of money with a reasonable amount of frustration, because trading, you're going to be frustrated at times. All right, where's my pain threshold? So we'll look at a couple tickers. I'm getting one, BK. So Bank of New York Mellon, you know, it broke out. I would have said the ideal time to buy it was probably, you have a weekly reversal pattern right there. You can see right there, probably the ideal time to have bought. If you own it, you're fine. The ideal time to buy it is as it broke out of there, came back, found support. Right now, I don't know. It's looking like it's going to break the 50-day moving average. To me, I like trending stocks that respect the 50-day moving average. They're just, because that's usually going to be where I'm going to trail behind, right? A close below the 50-day moving average or right behind the 50-day moving average. And you can see when you catch a strong enough trend, some of the stronger growth stocks will respect that line. This stock, its personality, we talk about personalities, it doesn't really seem to respect the line. See, it's kind of all over it, breaking it here, and now it's breaking it again here. So for me, I'm not going to say this is it's just not for me, right? I think there's better stuff out there. That doesn't mean that it won't find support and turn around and go up. But the way I see it is it's down in above average volume when the market was up, or at least was up 30 minutes ago when we started the show. So it's just not for me. It's not as, I like something that is super aggressive. And if I go back, the Bank of New York Mellon, it's got a history of just being sloppy. I like nice and neat. Another one, COG, is that an oil stock? Yes, Cabot. So we'll talk about the good on this one. The good is there's a lot of accumulation stepping in. I like that. Someone, I don't know if this is short covering or if this is institutional buying, but you can see it right there, right? Lots of accumulation, lots of buying stepping in. You could say it's kind of breaking out of this downtrend and it's breaking above the 200-day moving average. Let's go out to the weekly chart. The weekly chart is, if you look at the weekly chart, it's breaking out on the weekly chart right here. To me, this looks like this is a breakout, right? Individual oil stocks are just a little bit harder to trade. I'm not always a fan of them. Doesn't mean they can't go to the moon. Just because they are just so volatile, they are just going to move regardless of earnings. They're going to move in line with the commodity they track. So I think commodity stocks are just a little bit harder individual. So me personally, sometimes I'd rather just trade a leveraged, oil ETF. That way I can get a basket because it can move like one of these stocks, but you don't have that individual volatility risk. And when I'm looking at this, I talk about nice and neat. Right, it seems to have a personality of being sloppy. So for me, at the end of the day, I've said this, you have to make your own decision. That looks good, but I would need like a pullback and then a break for me to look at it. Kind of be interested. Some of the energy stocks are looking close. They're looking like they want to pop. Nat gas has really, really taking off the last couple months. We talked about UNG the last several weeks. That's been a big winner. I don't trade a lot of individual commodity stocks. They're too volatile. So that's me. So biotech, NVAX. Let me look at something for a second. So you got a lot of major sales growth. I wonder if they bought another biotech. Sometimes that happens where you go from little sales to a lot of sales, unless you're like a Moderna that just hit the jackpot. So let's see right here. This probably isn't for me either, because this earnings, right? You can see right here, it gapped down on earnings, right? That was the last. It gapped down 20% on earnings, even though it kind of did come right back and refill that gap. But to me, that just, there's a lot of indecision, and this is a pretty sloppy consolidation. So on the positive side, that it did just completely really erase that gap down, but I wouldn't be surprised if there was more selling that comes in, because anything that gaps down 20% on earnings, even if it comes right back, usually if the market pulls back, this can get hammered probably pretty hard. But you can see right here that there is really that pivot. I could make the bullish case. There's the neckline. There is a inverse head and shoulders pattern. Right? It broke out and then it came back in. So from the looks of it, you have a false breakout, which could mean an above average move the other way. And if I clean this up a little bit and this breaks, then I really don't like it. If you own it, you can stick with it. But again, you know, I mean, think about some of the stocks we just looked at. I just think there's just better stuff out there.
Any other tickers for today?
Let me show an example of what I talk about when I say nice and neat. Full disclosure, this is something that we own. We hit the target on it this morning, right? This was a stock, this First Solar. This is not a buy recommendation because it's getting a little extended, but this was a stock that was really, really sloppy. You can see right here. Then all of a sudden got nice and neat, right? The personality changed, and stocks can completely change their personality, right? You got a gap up on accumulation, right? Then it drifted back down, and there was a little selling, but it didn't come close to this. And then you have a major accumulation after earnings, and then it just bullishly trades sideways. And this stock with no distribution whatsoever, and now it's starting to wake up. So you have pop, low volume, pop, low volume, pop. This is the kind of setups that I look for when I'm just going off price and volume, right? I want something to pop on above average volume. And then if it's going sideways or drifting back, I want it to be mostly below average volume. And that's exactly what happened with this. And then it just completely, like, there's a lot. I mean, today there's 300% above average volume. Now that'll probably decrease by the end of the day. But I mean, this was one of those charts where I was getting frustrated because I got in back here, somewhere around here, and it didn't go anywhere for about 5 weeks. But it wasn't flashing any sell signals. You got that below, and it was just below average volume. And I usually have a rule, if a stock doesn't hit a target within 6 weeks, I have the discretion to get rid of it. And sometimes I do. I had to do that with wheat. And I'm glad I did that with wheat because then it rolled over. But with this was at 5 weeks, and I was getting really frustrated. And all of a sudden it starts to wake up, right? The personality is starting to change for the good. Now, I feel confident with this stock, you know, unless the market rolls over, because at the end of the day, these are all stocks. The market's going to take most everything with it, right? This will probably hold. If it pops and then pulls back, I wouldn't expect it to pull back under these major accumulation bars. That's what I would expect when I say, okay, if something moves it way up and then pulls back, right? If there's above average volume and then pulls back, I'm expecting it to hold. Okay, so CI, Camber. Yeah, I mean, if you got this at 95 cents, hats off. Guessing you bought it as it broke above the 200-day moving average. There's a lot of accumulation here. I don't really know what's going on. I'd have to read some articles. I've never seen this over here. But yeah, with this one, I mean, you caught a good trend. Hit a target one, raise yourself to break even, and then have some rules to let the rest run. Or just however you want to play it. Just however you play it, just have some rules. UNH. This is breaking down. This is not looking good. You can see right here, it had a really, really nice cup with handle pattern. Breakout failed, found support, shakeout. We expected that. Tried to break out again, and then now it's just rolling over. Distribution coming in. I'd rather have a stock, like for a solar chart that's looking good versus something like this that is showing weakness. I don't like buying weakness, excuse me. What is Tenet? What is the ticker on that? So THT, is it THT? Let's see. Is it the ticker or is it my internet? Oh, it's the ticker. It's not pulling up THT. I don't know why. Maybe if it's over the counter. This only does NYSE and Amex and NASDAQ stocks. So if it's like an over the counter the stock, it won't pull it up. Yeah. See if I can. Let me see if I can pull it up on stock charts. Stock chart has over the counter, THT. Yeah, stock charts isn't pulling it up. Now, when you say Tenet Healthcare, are you talking THC ticker? Because I have a Tenet Healthcare right here. If this is what you're talking about, THC. Yep, that's where I'm at. Okay, you got nice up volume. Now it's kind of slowly grinding higher. The momentum is slowing. You can see you got the major move right here. Still above the 50-day moving average. I'd see if it finds support around 71. I mean, it's looking like it's about to pull back. So if it finds support right here, that's great. See if it bounces. If it breaks, I'd be a little cautious. Right? Because if it breaks, it's showing weakness. And it has gapped below recently several times, but it keeps coming back. Anything else?
I do want to talk about the competition real quick for next week, but my voice is struggling. So we're going to do this again. Like we talked about the competition that we just had. Again, thank you guys for all the entries. We had a lot of fun looking this over, and I think we should keep it going. So we've decided to up the prize pool this week. I was going to try to pull it up. So I've got a form that you can actually submit your pick this week that explains it. So what were the rules again, Steve?
Last week, the rules were has to be a minimum of $10 per share. What else did we say? And no earnings.
No earnings reports.
No earnings reports, right? No buying before earnings. So I think that was it. And then we said, okay, we take Friday's close price and then to next Thursday's close price. So you have 4 full trading days.
And so I'm about to send this out in an email, but here is the link with the prizes and to submit your form. So the prizes this time, we're going to do a $250 gift card of your choice to first place. And we're also with that, we're giving a weekly income membership with a BOGO. So 2 years of the weekly income system For those of you who are not familiar with it, I could drop a link for that too. The weekly income system and the trade alerts for 2 years, that goes to first place. Second place is going to be access to Steve's Fang Momentum live workshop. Do you know when you're doing the next workshop, Steve?
I don't have one scheduled. It'll probably be about 2 to 3 weeks out.
2 to 3 weeks out. Okay, so a week or so after the competition, live workshop, very cool, very popular. And for the third, we're going to do an annual membership, which is a $297 value of the weekly reversal trade alerts. So 3 prizes, first, second, third. Prize pool got bigger. And what we're trying to do is get you guys engaged, have some fun, and just, start to really follow some of these rules that Steve and Greg are really trying to instill. As you can see, Steve is a big rules guy.
Yeah.
I was an awful trader in the beginning, and Steve watched, and he kept telling me those rules. He kept telling me about stop losses, and I ignored a lot of it, and I gambled on a lot of picks, and it cost me. And maybe you all went through that. The education, the rules, they add up. The time you put in here will reflect your portfolio. Plus, it's fun. And share it. If you know somebody that would be interested, share it. It costs nothing to enter this. All you have to do is be subscribed to the channel.
Yeah, so that's a great.
You may have another talk. Tony says, where was this last week? Tony, we should call this the Tonys, because you are what kind of inspired us to keep this going. Like I really enjoyed it, but the way, getting to analyze picks and getting more perspectives in here and more ticker symbols to look at, like it helps us all as a group. And plus, I know you've got another 50% winner for next week.
Easy. That's easy, man.
Just go on and tell us, Tony.
50%. You should be able to do that in your sleep. Yeah, and the prizes are going to be different. All the time, they're going to be different. So we're trying to change it up. And I think Ben did make a good point. You have to be subscribed to the YouTube channel to win. If you can, please share this with your friends or just anybody you want to. We would most certainly appreciate it. And I hope that everybody enters and has a good time with it, regardless of what happens. I hope you learned something today with IPOs, and at least how I like to play them a little bit. Anything else before we want to sound off?
No, but I do really want to encourage people to continue to email me, questions or us questions and ideas, things that we could talk about. There's a core group of people that continue to show up to this, and the more we work together, like if we do this as a group, the better off you're going to be. So, anything that's really bugging you or that you really would like to talk about, need some expert advice. Maybe we know it. Maybe we know someone that does. So just bring us in. Should throw in some additional services for you. Tony. Right. Tony, I will give you that BOGO offer as well. You did so good. I will also give you a weekly income membership. That's you deserve that for sure.
I hope everybody has a wonderful weekend. Enjoy the football weekend. I know I will be. So I don't have anything else. Y'all have a great weekend. Subscribe to the channel. Let us know. Fill out the form. And we'll see you next time.
Thanks, everybody. Tony, I'll send you an email.